The ECB has signaled that inflation in the euro area is beginning to slow down. Meanwhile, inflationary pressure in the United States has been ebbing away very reluctantly. But the American economy is doing surprisingly well. Therefore, the Federal Reserve may revise its strategy towards a more aggressive one or even return to raising interest rates. The U.S. Consumer and Producer Price Index reports released last week came as a very unpleasant surprise to dovish optimists. So many experts have postponed the start of rate cuts by the Federal Reserve until at least September. The key inflation indicator for the U.S. Central Bank was 2.8% on a year in February. Analysts expect it to decline to only 2.5% by the end of the year. The target 2% for the regulator will only be reached the next year. The next data on a core CPI will be released on April 26. It will show the dynamic of inflation, which does not take into account food and energy prices. Until then, the market is likely to keep hawkish forecasts of the Fed's monetary policy. Moreover, the hawkish prospects became so clearly visible that Wall Street finally responded to it. The S&P 500 ended last week with its biggest drop this year, and the index closed on Friday down almost 1.5%, with the chip makers and banks leading the losses. Corporate reporting season kicked off in the United States, but the first reports did look very impressive. The U.S. three largest banks' profit forecasts for the first quarter of 2024 did not come true and sent the stock market crashing. Therefore, the S&P 500 began trading on Monday into the corridor of 5,107 to 5,175 points. But the bearish momentum has fizzled out as the index entered consolidation and turned green on the chart. However, the escalation of the conflict in the Middle East, including between Iran and Israel, has increased the outflow of assets from stocks to safe haven assets, first of all in the treasuries and the US dollar. On the back of all the above factors, the US currency has no other way but to rise in value. This is what we see on the US dollar chart. On a late Friday, the greenback had its best week since September 2022, and the US dollar index jumped to about 106 points versus its peer currencies. The instrument opened roughly at the same level at the beginning of the new trading week. As long as investors continue to push back the possible start of rate cuts in the United States, the US dollar will remain a winner. The Japanese yen has suffered the worst losses against the greenback, and the yen slumped to a 34-year low of 153.85 against the US dollar on a Friday. Today, the yen weakened even more to nearly 154.40. Moreover, on a Monday, the dollar-yen pair seemed to react more to the monetary outlook in the United States than to the situation in Israel. The fact is that the Japanese currency now has the most short positions on the market, so simmering conflict in the Middle East could work in its favor. In the meantime, the closest possible point of physical intervention by the Bank of Japan on forex may be the level of 155 yen. As for the single European currency, after fixing a 5-month low on a Friday, it continues to decline. However, the economic reports published today again brought confusion to market sentiment. Industrial production in the euro slowed down its contraction to minus 6.4% year-on-year in February, but taking into account the previous January figure of a minus 6.6, it's still an increase. In monthly terms, the data looks more positive. Instead of minus 3%, industrial production crossed into the plus zone and rose by 0.8% in February. Notably, despite some positive signs, the reports turned out to be much worse than the forecasts. For example, the year-on-year rate of a decline was expected to slow to minus 4.2%, and even an upward revision of the previous reading to minus 6.6%, and doesn't particularly brighten up the picture of industrial production in the Eurozone. By comparison, US retail sales were not only upgraded in February but grew well above the estimated 0.3% in March. Retail sales rose to 0.7%, with the 8 out of 13 categories showing an increase. Thus, statistics confirm that consumer spending in the United States remains robust. In turn, high consumer activity is one of the most important components of the strong economy. Therefore, the euro weakened in response to these contradictory but generally negative reports. The euro-dollar pair briefly sank to 1.0630 amid selling pressure. The amplitude of the euro's fall and the pullback repeated itself again within the range of 1.0635 to 1.0660, and the euro-dollar pair is trading on a roller coaster in the light of the American statistics published a few hours after the European reports. US retail sales data, on the contrary, was beyond expectations. As a result, the euro-dollar pair broke the critical support of 1.0630 and continued its slide. The technical border for the possible pullback has shifted to the round level of 1.06. The US dollar owes its strength to the revised expectations of policy moves of the key central banks, as well as the macroeconomic data and escalating geopolitical jitters. Since last week, the euro has already weakened by 2% against the US dollar. Amid such a rapid decline, the euro's parity does not look so distant and realistic. Despite Iran's attack on Israel on late Saturday, crude oil is not growing. On the contrary, the Brent price even dropped below $89 per barrel today. It was a day off after Iran's airstrike, so investors had the opportunity to watch what was happening. In addition, it seems that all parties directly and indirectly involved in this conflict are trying with all they might to suppress this topic. So far, it seems that these efforts are yielding results. Eventually, the already overbought oil came under pressure by the strengthening US dollar. However, it would be an extremely reckless step to declare that the situation has stabilized. The geopolitical situation has become even more explosive. A sharp reversal of the Brent price confirms this, so the potential for a decline in oil prices will fit into a banal local correction. But the prospect of growth to $100 per barrel still remains. That's the Brent price again neglects a technical analysis in favor of the information background. You have watched the market review by InstaForex Analysts for Monday, April 12. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. See you online tomorrow.